Mayur Patel, who is joining us from 361 to talk more about markets. Mayur, you guys are doing some good work at 361. Let me congratulate you at the outset. We have some common friends as some of your big clients and good feedback. What are you having? What kind of discussions are you having right now after last 2-3 very good years? Now market is actually giving kind of some reality check to the investors, which are spoilt of very handsome returns, be it large cap, mid cap, small cap. Now things are looking slightly shaky on a variety of factors. Are your conversations capturing all of that?
Hi, Ajaya. Very good afternoon. So equity market performance is never linear, and predicting short-term performance is a futile exercise. So instead, we assess the risk-reward by evaluating the price-to-book valuation of the market vis-a-vis fundamental factors. So if you see, the BSE Sensex is currently trading at around 3.7 times price-to-book, implying an 18% premium to its 20-year historic mean. So there is a definite rise in risk. However, favorable macroeconomic conditions such as strong growth, stable current account, resilient banking system, and strong and stable fiscal regime, which would become even clearer post-elections, provide a lot of comfort about long-term growth. So if somebody is willing to take a slightly long-term view, then the equity market outlook seems positive despite premium valuations. In the short term, the risk has gone up manifold in the small and mid cap space, and that's where we do see material downside in the short to medium term.
Okay, what about a worry which is now hurting some of the sentiment that this earnings season gone by, bulk of the analysts said that margin surprise was an issue, but revenue growth actually remains sluggish. And if this continues, there could be disappointments which may start coming in on the earnings picture. What are your thoughts on the way third quarter earnings actually panned out?
So I would suggest, quarterly earnings will not be very relevant in terms of evaluating the outlook of the market or the economy. So what has happened is clearly in the recent times, the corporate earnings growth has been driven more by the margin expansion and less by the volume growth. But if you look at the investment cycle, which is at the nascent level, so on one side, your consumption continues to remain weak and the related sectors. On the other side, we are seeing very strong, at least the early signs of pickup in the investment cycle. And that should drive the volume growth going forward. And it will also reflect in the revenue growth. If you look at, for example, power sector, which was a kind of not a very high growth we were seeing in that sector earlier. But after seeing the strong demand in power in the high single digit to early double digits over the last 6-7 quarters, Ministry of Power in response came up with a upgraded target, overall increase the target of coal-based capacity addition by 40 gigawatt, right? So that's going to, and this is in addition to very aggressive capacity additions planned in the renewable space. So this is just one example of one part of the investment cycle, which is going to drive volume growth and also revenue growth going ahead. So I would say quarterly earnings will not be very relevant in analyzing outlook for the market, but investment cycle should drive improvement in volume growth going forward.
Point. In fact, I was talking to Sanjeev Sanyal yesterday on the longevity of growth. I mean, RBI governor last week told us that he'll not be surprised if the growth actually lands closer to 8%, nearer 8% this year, with probability that next 2-3 years probably 7 plus kind of longevity is possible there. So you are right about the capex theme. How should one be playing this capex theme? Is capital goods, engineering, light engineering, all of those an area of your interest?
Share one data point. Fixed capital investments in real terms, have been growing in double digits for last 2 years, and this is contrary to a very subdued trend of 5.5%, which we witnessed during the period of FY13 to 20, right? So that's one of the indicator, of investment cycle picking up. So manufacturing is going to be a mega theme over the next decade. And government incentives like PLI have been giving very strong boost to the Make in India initiative. So manufacturing of mobile phones, consumer durables, electric vehicles, etc., have been seeing very strong traction. And also, like recently there are very large plants in semiconductors which got approved, and in very short span of time, which is really surprising and a pleasant surprise, I would say. So semiconductor fab manufacturing, semiconductor assembly and testing could also scale up in a big way over next 5 years time. So this is also going to aid investment cycle. So sectors such as industrials, capital goods, urban infra, railway, defense, electronics manufacturing, power utilities, renewables, and also the related financiers are very well positioned from a long-term point of view.
Consumer durables is an area of manufacturing which has not done well in the last 2-3 years at least. Do you see any early signs that this part of manufacturing may start coming back?
See, the manufacturing part is linked to the underlying demand. And what has happened is inflation was a key factor which subdued the demand in consumer durable space over the last few years. And that's what is reflecting in the operating performance of all these consumer durable companies. So I think there has been a good consolidation of base for last 3 years. And as the inflation is being absorbed gradually, going forward, I'm hopeful that the demand in consumer discretionary across the board, especially in consumer durables, should gradually pick up over next 12 months' time.
I want to talk about utilities a little more, because there's a entire value chain: power, legacy power companies, renewables, power financiers, wires and cables, and then transformer companies. Which part of the utility, or if I say power value chain, are you most bullish on?
Ajay, see, let me just give you one data point, right? The power demand has been resilient for 6 to 8 quarters, as I mentioned, and that's reflecting in the peak power shortages, has again inched up to around 4%. This is as compared to a consistent trend of declining from peak of 12% in FY02 to almost negligible levels in FY21. And in response to this, there are massive capacity additions being planned across thermal and renewables. So sectors in power utilities, sectors which will which would enable this power capacity additions, which would include equipment players and things like that, and also at the end T&D players would also benefit out of this theme. So these are the sectors, and quite a few capital goods industrial companies also have capabilities in supplying across thermal and T&D and renewables sectors of the power.
Just one quick word on this entire stress test issue of small cap, mid cap. By now, you may have seen a lot of asset management companies have come out and declared their results. Things don't look alarming, at least the outcome, but market is still nervous. What did you make of that entire issue and the communication many of these funds have released so far?
No, so the view is very clear. We have been highlighting a word of caution on small and mid caps for quite some time. If you see, there has been a robust rally in across small and mid caps, and with an astonishing 30 to 35% divergence between Nifty returns and returns of small and mid cap indices. So the tail end of the market has delivered incredible performance in a broad-based manner. So there is definitely a rise in risk across small and mid caps, no matter how you try to analyze it through valuation parameters or through ratios and things like that. But clearly there is a froth in small and mid caps. So I think it is on individual AMCs to take necessary steps, and I think most of the players are cognizant of this. And I think in terms of monitoring risk and looking at liquidity factors, and things are being done. So I don't see any major issue per se, but definitely valuations are an area of discomfort when it comes to small and mid caps to us.
All right, Mayur, we'll let you go on that one. Thank you so much for joining us on the show today.
If you like this video, then like, share and subscribe to ET Now.